Welcome, everyone. Good morning, good afternoon. I know we have folks on from two different coasts. Welcome, everybody. I'm Caroline Cummings. I'm the Executive Director of Oregon RAIN, a nonprofit based here in Oregon, and you're going to hear a little bit more about us. But I just wanted to say thank you so much. I know we have folks who are dialing in from Oregon, California, Virginia, DC, New York, and Philadelphia. So this is going to be a super lively conversation. We're thrilled to have Sebastian and Jenny and Julie with us from the SEC here today to talk with you about some of the changes that are being made around the accreditation status. So we're going to just go ahead and jump right in. I am going to share some screens with you all, and we're just going to do a quick introduction. We'll talk about some housekeeping items. I'll talk a little bit about, for a minute or two or less, about Oregon RAIN, why we invited Sebastian and Jenny and Julie to be here today to talk with all of you. And then I'll hand it over to Jenny and Sebastian. And the bulk of the time will be for Q&A because we really want to have the opportunity for you to interact with Jenny and Sebastian. So thank you all for being here. Really appreciate you taking the time today with us. So if you haven't already, if you could please, in the participant mode, rename yourself to put your name, your organization, and your role. And if it's too long to do that, you can also add in the chat who you are and what city you're from. That would be really helpful. I know that we don't have time to do individual introductions with everybody on the call, but this will help aid in that discussion. And then also we are recording the session. We'll post it to the Oregon RAIN site as well as the SEC site is going to post that as well to their Office of the Advocate for Small Business and Capital Formation. I'm only going to say that once, you guys, that's long. So as I mentioned, we want the bulk to be about interactivity. So who we are, Oregon RAIN, we actually were born out of the 77th legislature here in Oregon. We are a 501c3. We were created so that we could partner with communities to do three things: catalyze entrepreneurial ecosystems, connect entrepreneurs to needed resources like people, programs, physical assets, and capital, in particularly the overlooked entrepreneurs. And then ultimately what we want to do is contribute to the creation of prosperous economies, which has been super important now more than ever with the pandemic, as well as here in Oregon, folks who have been dealing with the different fires. And then our governor just put us on another 2 trees. So definitely a need to help support businesses. Just real quickly so that we can explain sort of what we do. My team of venture catalysts are also on the call. Essentially, we're entrepreneurs who help catalyze these 10 elements within a given territory. And the elements that are presented here today are really what's needed in order to create a thriving entrepreneurial economy and innovation ecosystem. Today, we're talking about the investment capital piece. And what we do is we score a region on how well they're doing in these areas, and we help fill the gaps as needed. We're funded by organizations and cities and communities who invite us in. There's 17 cities across 4 counties, several foundations, the federal government through the EDA as well as the USDA. And we are really honored to get to do this work in the communities that we serve. We also have received and been a part of 2 federal grants with the U.S. Economic Development Association. One is with our programmatic partner, seed fund support partner, the Cascade Seed Fund. So if you guys can wave, Milena, Robert, and Julie, who are also on the call. We raised $300,000 a couple of years ago and did a search to find a programmatic partner to raise a fund that really prioritized the underrepresented entrepreneurs. So we're excited to have Cascade Seed Fund as a programmatic partner, and thank you for joining us today. And then most recently, we received a Industry Challenge Blue Economy grant as part of a grant that OSU, Oregon State University, Hatfield Marine Science Center in Newport, Oregon. We were a part of that grant, and really we're focused on building the blue economy or the marine tech economy along the nearly 400-mile Oregon coastline, which we're excited about. And then today, you're all here to hear from Sebastian Gomez and Jenny Regal with the SEC Office of the Advocate for the Small Business Capital Formation. There, I said it again. And in a moment, you're going to get to meet them. But first, who are you? So who's on this call today? And we did have another 10 registrations come in just yesterday. So those folks are not reflected on here, but most of you are entrepreneur support organizations supporting entrepreneurs in capital raises, your accredited investors, your fund managers or staff of funds, foundation reps, accountants, lawyers, fund analysts, and advisors. So this session, as you know, is private just to you. We will hold another one early next year with Sebastian and Jenny focused specifically around for entrepreneurs. We also asked if you've participated in a capital raise in the last 12 months, and 36% of you said yes, you have, which is great. And then specifically to those in Oregon, we asked if the wildfires have affected your investment outlook, and the majority of you did say no. So that was really good to hear. Okay, so at this point, I'm gonna turn it over to Jenny, and she's going to introduce herself, and we're gonna open it up. So thank you all for being here. Jenny.
Excellent, thank you so much. And thank you, Carolyn and Raj and Corey for making this happen. We know this is a lot of work, and we are thrilled to be here to talk to you and have this, dialogue and discussion. We really want you all to be a part of it and to share your views. We'll kick it off with some background information, which Sebastian will talk about our office, just to give you a sense of who I am. So I'm Jenny Regal. So I'm with the Office of the Advocate for Small Business Capital Formation. As Caroline mentioned, it is like the longest title known to man. But what we are really fortunate in our office because we get to be able to come out and speak with the companies and the investors that are out using our rules and seeking to raise capital and hear from them what's working and what's not. And I've been at the SEC. Before I came to the SEC, I was in Silicon Valley and I did work on some VC deals. When I came to the SEC, I reviewed public company filings, and then I worked for the directors looking at a 10,000 foot view of kind of what was happening in the division of corporation finance until I decided that my heart was with the small companies. And so I switched into, at the time, the Office of Small Business Policy, working on writing the rules that we're now looking and evaluating and reconsidering. And so I feel like I've had a really fortunate opportunity to be able to think about the rules, but also be able to hear different perspectives from this really broad range of what is a small business. And so with that, let me turn it to Sebastian to introduce himself and give some information about our office.
Thank you, Jenny, and thank you so much, Carolyn, Raj, Corey, Jennifer, Ariel, the entire team in Oregon Rain again for doing this and putting this together. And a special thank you to everyone joining. I was following the chat as everyone was putting their names and location and affiliation, and it's an amazing group. And as everyone has been saying, we really hope to this to be an active dialogue and that we can all learn from each other. So don't be shy. At any point during the presentation or during the Q&A, this is an opportunity for everyone to learn from each other. I'm Sebastian Gomez. I joined the SEC about 13 years ago, a long time, and came from private practice where I was doing federal securities laws. Back after the Jobs Act legislation was passed, I was fortunate enough to get to work on the rules to actually implement some of those changes, specifically a regulation crowdfunding. And through the work on that rulemaking, I got to meet so many passionate people about small business that I was hooked. I joined the same office that Jenny mentioned, the Office of Small Business Policy. Was there for many years working on issues relating to private capital formation and access to capital and the challenges that investors face in that space. And then when Chairman Clayton came to the SEC, he asked if I would join his team to help push the capital formation agenda. And I couldn't think of a better opportunity to continue doing the same work and pushing policy. And since August, I joined the Office of the Advocate for Small Business Capital Formation, which we all recognize has a very long title. We did not pick the title for the office. It was Congress that actually selected the title for the office. And but you know what? The way we view it is a long title that matches the very important mission that we have. As members of the SEC, we have to provide standard disclaimer So I'll do this for Sebastian and for Jenny and for Julie, who is our colleague from the Office of Small Business Policy, who introduced herself in the chat. And that is that the views that we express today are our own and may not represent the views of the commissioners, the entire commission, or our fellow colleagues at the staff. Before we dive into the accredited investor definition, which is the topic that everyone here is eager to hear about, wanted to just give you a little bit more information about our office. As I said, our office was named by Congress because our office was a creation of Congress. Congress actually did legislation that formed our office, and we are a relatively new startup within the federal government. We started operations in January 2019, and it's important to note here that our office came about from bipartisan legislation. And whenever you hear about bipartisan support, you know there must be a real need for everyone to get together and support something. And in part, we see it as policymakers recognizing that there's this gap between the role that we society have come to expect from small businesses as innovators, job creators, wealth creators, and on the other hand, the accessibility to capital to meet those expectations. Hence, the need for advocates. And that's what we view our role to be. So we have a particular focus on addressing unique challenges that are faced by women, minority-owned businesses, rural businesses, and businesses affected by natural disasters. The way we do that is we are proactive in our approach, and we look to engage with voices that bring those perspectives so we can learn from those perspectives. So when our title has the word small business within it, so what do we mean by small business? Who is captured by that? At the SEC, we view the small businesses to fall in three different groups. Early stage companies, so these are like the very early startups, mature and later stage private companies, and then the third group is smaller public companies up to 250 million in public float. So as you can imagine, our portfolio is quite broad. We capture from the tiny little startup that is looking to open a restaurant on Main Street, all the way to that public company biotech that is looking to cure cancer. That means that the issues that each of those groups face are different. But there is one thing that it's in common. As small businesses, they tend not to have a dedicated government relations office. If small businesses run into an issue, they just put their heads down, they work through it, they moved on, they solve it. So our office is here to help and work with those small businesses and their investors to identify what are the most pressing challenges that they face and how can we work to actually elevate those concerns to the staff, our colleagues here in the commission, and the commissioners themselves to resolve those concerns. Another important aspect of our office is provide educational resources and to be an entry point for questions. So the SEC has a lot of rules, interpretations, guidance, and it's hard for businesses, it's hard for investors, and trust me, it's even hard for sophisticated counsel to keep it all together. So we are here to make sure that if anyone has questions and issues, reach out to our office. If we don't know the answer, we'll be happy to make sure we put you in touch with the right people at the SEC to help you address that concern or question. So I'm going to turn it over to Jenny to cover the accredited investor definition. But before we do that, we do have a poll today. And since I mentioned educational resources, I think there's two questions there. One relates to educational resources. The other one is about commenting on rulemaking. So we're very curious about your thoughts and answers to that. And then from that, we'll launch to Jenny's presentation.
Thanks, Sebastian. And you'll want to scroll down to see the second question in case you don't have that viewed on your screen.
This is fascinating, by the way, because it is so important that we make sure that we get our message across in a way that actually people find it interesting. Traditionally, the SEC has been very much a text-driven agency in which stuff is just long papers, releases, and thinking about how can we get our message across. It's very important for purposes of making sure we're reaching the right audience.
All right, we're at about 60%, so we'll give it another 30 seconds for the poll, just FYI.
Hi, Michael. Thank you for your comment on the chat there. We love doing these interactive meetings, and we hope that this will be very interactive, as I mentioned, because it's a good opportunity to actually chat. And specifically in this case, there's people from all over the country, so that's amazing.
And if people have other ideas like that or suggestions or want us to, do different presentations on different types of areas of law, put that in the chat too. We welcome feedback and thoughts, and we really want this conversation to be kind of a dialogue between each other. We'll talk about the accredited investor definition in just a moment, but ideas or thoughts or suggestions, we are 100% welcome and would love to hear what would be helpful to you.
While we are waiting for the poll to finish, I want to put a plug for our next event. Our next public event is a discussion with women of color entrepreneurs and their investors, and it's scheduled for Monday, 11/23. So Monday, November 23rd at 7 p.m. Eastern, 4 p.m. Pacific. Julie Davis, who is joining us in the chat, is going to moderate the discussion. We have 4 amazing panelists. It's going to be an interactive presentation like this one where people will be able to chat questions and interact with us. We're very much looking forward to that and to hear about what are the particular challenges and success stories of women of color entrepreneurs and investors. If you want more information for that event, sec.gov/OASV videos. There's information on the last slide that Carolyn is going to show on how to reach our office. Send us an email if you can find it. There's an Eventbrite registration for it.
Awesome.
Great,
so
Jenny.
Corey, I'm up. Okay, excellent. So how does this definition fit into capital raising? So I don't want to, I'll go through this just to give some context on how the accredited investor really combines with capital raising. Accredited investor is very central to how capital is being raised by so many different companies and how investors can access different capital raising options or different options for investment. So stepping back just at a high level view, a securities law thought is every offer or sale of a security must either be registered or have an exemption from registration. So registration means an IPO. Exemption from registration, there are a number of different ones. The most popular by far, and this has been over the last few years, has been either a registered offering or a private placement transaction under 506B. And we saw that in the 12 months ended June 30, over $1 trillion was raised under both of those avenues. So these are really where the bulk of capital is being raised in the market. Another common exemption that is being used and that relates to the accredited investor definition is a rule called 506B. Some people call it accredited investor crowdfunding. And this is where about 70 billion was raised. So how do these citations and exemptions interplay with the accredited investor definition? So essentially, in practice, the vast majority of these transactions are limited to accredited investors. So for your private placement transaction under a 506B, which is again where over $1 trillion was raised over a 12-month period, 97 to 98% of these offerings are solely limited to accredited investors. And while sophisticated but non-accredited investors are permitted to participate, if one of those non-accredited investors does participate, certain disclosures needs to be provided to those investors. So many different companies and funds are not going this route of including a non-accredited investor. Another provision of a private placement is you can't use general solicitation. So you can't go out and put your offering on the internet. It needs to be a network, or you need to have that relationship-based situation to use it. And you need a reasonable basis to believe that the investor is accredited. So to compare that to your accredited investor crowdfunding, that 506C, you can use general solicitation, meaning you can put your offering on the internet and go out and try and solicit investors, but you do need to take reasonable steps to verify that all your purchasers are accredited. So let me switch to the accredited investor definition, and bear with me 2 seconds while I share a PowerPoint. Okay, hopefully everyone can see that. Let me know if you can't.
Jenny?
I think we can see it, Jenny.
It blew up.
See it?
It really blew up really big for me. I don't know if that's the same for everybody.
I can try to pull it up, Jenny.
Oh, okay. Did it? I will stop sharing. So you can't see it?
You can see it, it's just huge. It's like you only see, at least on my screen, part of it.
Oh, well, that's no good. Well, I will, hopefully Sebastian can help. I'm sorry about that. Let me just start talking about it, and hopefully Sebastian can help on the tech side. We had tried this, of course, at the beginning, and it worked just fine, and I'm not sure what happened in that intervening point. But essentially, the slide shows in blue the existing portions of the accredited investor definition, as well as green, new changes to the definition. Let me try and see if I'm going to share a different way. So bear with me, because you're going to see me, and see if I can share. Does that work better?
Yes.
Okay,
Looks
perfect.
great.
So the blue is the existing portions of the definition, and the green is basically the new portions that are changing. So looking at what is changing in this definition. So for the current wealth and income thresholds, those are remaining in place. And the definition was revised to include spousal equivalents, just like a spouse. Turning to probably the most talked about portion of this definition, which is the fourth box. And this is a new category that permits individuals to qualify based on certain professional certifications from the commission that the commission may designate from time to time. And you'll find that what I just said was actually broader than what that box included. So the box includes the first order that the commission provided under this segment. So it has the potential to be a much broader category, but for right now, the first order was a pretty narrow choice of including essentially investment professionals that hold a Series 7, Series 65, or Series 82 and are in good standing. So just practically, what does this mean? So if you hold a Series 7 or Series 82, to take that exam, you need to be associated with a FINRA member firm and have be in good standing and have a license. On the Series 65, this is essentially the licensed state investment advisor representative exam. You do not need to be associated with a FINRA member firm to take the exam, but you do need an active state license or registration. So essentially, I would say the big takeaway here is that it opens the door for future commission orders. And there will be, when these changes are effective around December 8th, the rule writing staff that wrote these rules will put out a small business compliance guide. And in that guide, they will walk through how you can provide feedback to the commission under this provision, giving them your thoughts on kind of what should be included in this definition under this new category. Speaking to additional changes to individuals, it also includes for investments in a private fund, knowledgeable employees of those funds. And these are generally persons with meaningful investment experience and sufficient access to the information necessary to make those investment decisions about the fund's offerings. So turning quickly to entities. So On the left-hand column, you'll see that investment advisors were added, both SEC, state registered, as well as exempt. Rural business investment companies were also added, and these are companies that are approved by the Secretary of Agriculture. So the enumerated list of entities in that fourth column, those are entities with more than $5 million in assets. And what that certain means at the beginning of the statement is they're not formed for the specific purpose of acquiring the securities offer. So basically entities that are formed for another reason, and it can include corporations, partnerships, now LLCs has been officially added to the rule, trusts, 501c3 organizations, as well as employee benefit plans. So the family offices were also newly added to this category, and it would include those with at least $5 million in assets under management and their family clients. So these are essentially entities that are established by families to manage their assets, plan for their financial future, and are generally companies that have no other clients other than their family clients, being those family members or trusts or charitable organizations. The one thing about family offices is for them to be an accredited investor, the investment must be directed by a sophisticated person. The other new category of entities is entities that own investments of more than $5 million. And so this is a way, and this is somewhere this is an area where we had heard a lot of comment, is tribes and governmental bodies to be added in that category. So that was definitely an area that our office had heard a bunch of feedback on. Two things before we open it up to quick questions is I saw in the registration there were two different things that were asked about, and I just wanted to address them quickly here before we turn it over to questions, which is one had asked about changes to verifying accredited investor status. And this goes back to what I mentioned in the beginning. Anytime you're talking about verifying an accredited investor, you're talking about that accredited investor crowdfunding, that 506C, where you're doing general solicitation. And not in the accredited investor release, but in a separate release relating to amendments to the exempt offering structure that the Commission has adopted. The Commission did include one more non-exclusive safe harbor. So there was a number of different ways that you could verify that you took reasonable steps to verify that someone was an accredited investor. And the new non-exclusive harbor basically says that if an issuer has previously taken reasonable steps to verify that an investor was accredited, that within 5 years from that point, they can have the investor do a self-certification, and that would qualify as a reasonable step from that point because of the prior steps taken. The other kind of guidance that was given around this point that I wanted to highlight was that in the principles-based method, that in some circumstance, reasonable steps determination may not actually be substantially different from an issuer's development of a reasonable belief under your standard private placement. And these are questions that have come up, and they're a little bit weedy. So to get out of the weeds, let me step back a little bit and discuss the other thing that had come up in registration, which was someone had asked about content to help recruit potential investors based on this expanded new definition. And this is where I would love to turn it to you. What would be helpful to you? What would be helpful to be able to reach out and give this information in the market, whether it's in your talking to potential new investors, whether it's something on our website? We would love to hear what would be helpful. And it kind of goes back to that original poll of what educational resources are going to be helpful to you in your day-to-day. So I welcome, I don't know if people want to join the conversation now. This is where we'd love to turn it over to you to ask questions, to join in the chat on ideas. The floor is kind of yours.
Well, thank you, Jenny, and thank you, Sebastian. That was really helpful. And there are some questions coming in already. Shelley from Black Girl Ventures is asking, how does the SEC see the 506B having the rule that you need to have a network as being a barrier for underrepresented and or under-resourced business owners?
And Shelley, Jenny, I'll give you a break and then I'll take this one, and feel free to add, of course. Shelley, that's a great question. And I think One of the, as I mentioned before, our office is particularly focused on unique challenges that women and minority-owned rural businesses and business impacted by natural disasters. So one of the critical and major components of our engagement is identifying and reporting on the unique challenges that these groups face. And we embrace this with intentionality because we fully recognize that our economy is hurt by systemic challenges and by underestimating certain entrepreneurs. There's a lot of unrealized value. And I think what you brought up here is something that we've heard a lot, and specifically goes to, as Jenny was mentioning, 506B does not allow you to generally solicit, meaning you can't go to the world to actually try to find investors. So you're supposed to find those investors among those people with whom you have a pre-existing substantive relationship. And if you are a business owner and you are part of an underrepresented group, then you may not have that sophisticated network that will be able to actually provide that funding. And that is a huge problem. And it's unfortunately something that we've heard multiple times. Last year, we went to Accredited and we did an event in Atlanta at Morehouse. And part of the thought was, let's just make sure that, first of all, we highlight that this is an issue that people need to be aware of, and we need to have a conversation about what would be the best way to solve this. We do a small business forum. Last year was all virtual because of, actually not last year, I keep thinking last year, but our most recent one took place earlier this year in June, and it was virtual due to COVID. And we were proud to showcase many diverse speakers, 50% of them racially and ethnically diverse. And I think we're going to hear about these challenges at the event that Julie is speaking at and moderating next week. Part of the thought here is the way we think about this is we need to make sure that we focus on what the challenges are. We also need to make sure that we show what are the success stories, because it's important for people to know that there are success stories among that. And in part is to have something in addition to the negative statistics. And I think all of you are probably familiar with the negative statistics, but approximately only 1% of VC funding goes to businesses with Black founders. Let that hit you. I mean, 1% of the VC funding goes to businesses with Black founder. Less than 2% goes to businesses with Latino founders. And only about 10% of it goes to female founders. So, Shelley, I think it's a great question. It's something that I'm very much interested in hearing from the group about ways in which we can try to bridge that gap that exists there.
Right. Julie from Cascade Seed Fund is asking for more guidance and detailed steps around the, quote, reasonable steps that Jenny talked about earlier.
Yeah, and we can, I'm happy to send around a link to actually the Office of Small Business Policy, the one that actually Sebastian and I were previously both a part of. They have this wonderful website that talks through a lot of these different technical points on how you raise capital and what do these exemptions mean. And so I'll drop a link in the chat to that resource. It's the Office of Small Business Policy, and it talks to specifically 506C and kind of how to a bunch of different guidance. So there's a ton of different resources there that will help walk you through it. I think also if you have any questions on this and you want to talk later, email us at smallbusiness@sec.gov, and we're happy to talk through questions or concerns, or if it's a detailed interpretive question, we work well with all of the different definitions and staff, and there's so many wonderful people who really are trying to help businesses and investors understand the rules so they know what the lines of the road are, that, you know, these are things that are important. It's important that companies have an opportunity to understand them as well as their investors. And so this is something that we're happy to keep this conversation going well after today.
I saw that Kate had a follow-up question on, and I'll just read it. Would love to hear more about how the SEC thinks more broadly about the social equity piece, finding the line between protecting potential investors and excluding those who have already been historically and currently excluded from asset accumulation and high income earning. And this goes to a point that Jenny made, which I think it's important to emphasize, and because it's an area where the Commission has invited the public to provide feedback. Keep in mind the accredited investor definition for over 20 years focused on wealth. So you only, as a natural person, you only qualify as an accredited investor on the basis of income or accumulated wealth that you have, excluding the value of your personal home. So for over 20 years, this was something that impacted the ability for those that had not accumulated wealth from participating. Now, as Jenny mentioned, the Commission is asking for, it has opened the ability to qualify by other means of sophistication other than wealth. And once the rules go into effect and there's ideas for how to actually expand the definition to look at factors other than wealth, we are very interested in hearing perspective on that. There's one other question here from Josh. Not sure if this is a question, but more of a suggestion. Would it be possible for the SEC to create a program that can help more people into VC, specifically focus on underrepresented communities like veterans, POCs, et cetera?
So I mean, I think that our office is here to try to help explain what the rules are, and to try to walk people through kind of what resources they need to do it. We don't actually we can't develop a fund or develop a program that actually helps someone walk through the fund. I think in creating a fund, for those who've done it, I'm sure that you can speak to it far better than I can. There's so many different considerations that you would need to think about beyond just the SEC. There's tax different considerations, there's state law considerations. And so I think there are a lot of things, and it's very situational based. So while we welcome ideas on how we can better empower people to help and go out and create new funds, or to talk to new investors, or to better fund underrepresented entrepreneurs, we welcome those suggestions, and we are happy to facilitate those conversations and engage in these very important discussions. We can't actually go out and start a fund ourselves, or walk through all of the elements of fund creation, because it does go pretty far outside the purview of just what the SEC's rules are.
And to add to Jenny's point, one of the challenges that we continue to hear is with respect to businesses that are within a funding gap of, say, $1 million to about $5 million, $6 million. And what we are hearing is that up to $1 million, it's not easy to get capital, but between a combination of bootstrapping, friends and family, businesses are able to grow to that space, and with the help of angel investors, they get to that funding. But as the funds have grown in size, the minimum investments that they're looking to make have also grown. And that means that jumping from that $1 million sweet spot for angel investing to that fund investment from institutional investments, there's a gap there. And that gap particularly impacts rural communities, particularly impacts minority-owned businesses that are in parts of the country that just don't have the ecosystem to facilitate how to address that funding gap. We've heard about a number of challenges, an area that we want to learn more. Josh and others, to the extent that there's thoughts as to ways that we could actually help facilitating some of that. Is it challenges with respect to our rules that are actually roadblocks? Is it just that financially it doesn't make sense? Because what's important is sometimes you hear about articles that say, well, the private markets are flush with capital, but the reality is for certain small businesses, and this is in particular small businesses that are minority-owned and women-owned small businesses, they're not seeing that the private markets are flush with capital. And so we very much encourage people who have ideas as to how we can help solve some of these challenges and can help us through those steps to reach out to us, give us a call, send us an email. Would love to do a meeting one-on-one to just chat about what you're seeing in that space.
I have a question for both of you. There's many fund managers and staff on the call today. Based on what you shared about the new amendments to the accredited investor definition, how would you suggest that they go about adding new investors to their funds based on these new expanded definitions, if you have some examples there?
That is a great question, and I think it's something that probably changes based on kind of the makeup of a fund and what. So I think one of the challenges that we've always heard is matching the right investors to the right investment, right? It needs to be the right risk profile or industry makeup, or, you know, depending on what the fund is, what their business plan is, they may attract different investors in different ways. And so I think to speak broadly to that, it is difficult because different funds may have different plans or different strategies on what their risk profile is, and you always want to make sure that you're matching your risk profile with the investors that are appropriate for that investment. And so I think it is hard to speak to that on a specific strategy. I think one of the questions that I had seen Shelley Bell ask is about, you know, two of the licenses to gain accredited investor designation require that you be sponsored by a broker. Has there been any thought to making the licensing more accessible? And I would say this is where that concept of there is an open suggestion that is going to provide an avenue for people to provide feedback on different areas of it, whether it's education or certification or expertise, that should be considered by the commission. So if you have an idea that you think encapsulates what should be the definition for someone who has that investment experience and should be able to be considered an accredited investor because of their either experience or their education or a particular certification, I think looking at what the fact that there is this open door that the commission has requested feedback on, and providing feedback. I think the most impactful comments and feedback to the commission are those that really take into account market dynamics. The people on this call are the experts in their area of the market, and to give that feedback and that market perspective to the commission in your suggestions, or whether in a comment letter or whether it's just general feedback, it's really invaluable for them to be able to take that and be able to help make the decision, help the commission make a different determination or include a broader order for what could potentially be considered a credit investor. Now, Sebastian, I'm not sure if you had other thoughts. Definitely feel free to weigh in or disagree.
Yeah, so going back, maybe a step back to Carolyn's question, and I saw that someone also asked for illustration, particular examples, a couple of examples of how the definition has changed. So let me give you two examples of that. There was a lot of uncertainty with respect to family office and specifically family clients as to whether they qualified as accredited investors before this change took place. So what the rules do is after December 8th, when the rules go into effect, as Jenny described, the rule has taken some of that uncertainty out to make sure that they qualify. One other example is what I call loosely the catch-all provision for entities. Any entity that has more than $5 million in investment. Who does this apply to? Well, it applies to a broad group of people, but we've heard this as being a particular challenge for Native American tribes who were looking to invest as accredited investors. Their investment was not in the form of a corporation. The Native American tribe was not going to Delaware to form a corporation. It was an entity created by the tribe itself. And therefore, there was uncertainty because it didn't fit within the categories of accredited investors for entities. So that's another example of another group that now will have certainty as to their ability to qualify as accredited investor if they have more than $5 million in investment. Hope that answers that question.
So if I understand correctly, then it sounds like the commission is still looking for feedback. The amendments to the definition are not fully baked yet. There's just the ones that you shared, Jenny. So if anyone on this group has ideas to submit to the commission, would they send that through to the two of you if they have a suggestion? Like, here's an example. Working in a lot of rural communities, we interact with a lot of high-level management who are running their own businesses or have worked in other businesses, spent careers looking through due diligence of their own business and potential markets and hiring and firing. And they're very smart people, but they may not fit the wealth definition. They're not financial advisors. So it would be great if folks like that could invest and could be considered accredited. So that's one example. And then how would this group submit ideas to the commission?
So Jenny, let me start with that, and I'll turn it over to you. Just one thing to be clear, the rules that Jenny described are final and they will go into effect on December 8th. But let's take a step back and think about how does the SEC go through a process of doing rulemaking. The way that works is the SEC has to propose changes to the rules, and that is done through this 200, 300-page document that has an economic analysis, has to put it out for comment, usually for 60 days, sometimes for 90 days, considers all the comments that comes from that, and then it has to finalize the rules in the form of another release called an adopting release that also has to not only describe all the changes, describe what the comments receive, provide an economic analysis, comply with a number of other federal requirements with respect to Paperwork Reduction Act and a number of things. Just to note that we're talking about 200, 300-page documents. What the commission did in the rules was create a mechanism by which the commission can, in essence, do that same process of expanding the definition to actually consider other ways, other certifications that may go to sophistication of investors, and do that in the form of an order. So what does that mean? Instead of doing a 200, 300-page document, the commission now has a process in which it will consider a potential idea, and then it will put it out for comment still, so everyone can actually chime in whether it's a good idea or not, and then would be able to finalize that order and in essence add to the categories of accredited investors on the basis of certifications by using that process. So what it is first of all, opening the door to looking at sophistication as a way to qualify, and then creating this mechanism that should make it less cumbersome for the commission once it identifies potential areas to actually put those into practice. Jenny, do you have more on that?
Yeah, I mean, I think you covered that perfectly, and that is a great explanation. I think sometimes it's hard to step back and think about the rulemaking process outside of the SEC, but yes, the practical meaning is the rules are final. The slide that that we showed those are the final rules, and that is what will be effective on December 8th. However, this whole idea of an order that could allow additional certifications or designations or education requirements to be considered an accredited investor is very new for the SEC. The Securities Act doesn't do a lot of executive orders, or not executive orders, apologies, doesn't do a lot of commission orders to be able to change the rules and potentially broaden. And so this new avenue is new and exciting for us. So it does give that window. So now, how do you do it, which is always the most important part. So we will have on our website, when these rules go effective, it's our understanding that the staff that wrote the rules with the commission, they put out a small business compliance guide, and that guide will walk through how you can provide that feedback. Because technically, this provision of the rules is not effective until December 8th. So that feedback, there will be an avenue on kind of how you go about doing it. And we will have instructions on our website that helps people walk through the process as kind of where it's occurring. We also have a video on our website that walks through how do you comment on a rulemaking. Many people have never commented on SEC Commission rulemaking, and we want your feedback. To be able to weigh into the process and to provide that market perspective is really important, because without it, the commission just doesn't have all of that information. And while our office can go out and we will take back all that we hear today and all of your feedback and all of your questions and think further and discuss with the staff, it's also helpful to have kind of that separate input of a letter or an email or just a thought provided directly to the commission, sharing your views and being able to make that difference, which is important. And Julie, yes, put down the link to the video page that walks through kind of that how to comment, but please check it out. And if you go to our pages and you have suggestions on how we can improve, or, hey, it'd be really great if you had X, Y, or Z, tell us, reach out, shoot us an email. We are open to feedback, and we want to be able to create resources that actually make a difference in the market. And we're open to suggestions on the best way to be able to do that.
Jenny, I have another question. One of the new amendments talks about knowledgeable staff of an existing fund because they're participating in due diligence and so forth. How does a fund manager know whether or not, like, is it a certain amount of time? I mean, that's very ambiguous. If you could provide more clarification, that'd be great.
Oh, absolutely. And that is a fantastic question. And I don't like getting into the details unless someone wants me to, but I am more than happy to dive right in, unfortunately. Yes, I'm a securities lawyer at heart. You can't take the details out of me. But essentially, there's an enumerated definition, but it's basically executive officers, directors, trustees, general partners, someone on your advisory board, or a person sitting in a similar capacity. It also includes basically non-administrative employees of that private fund who have been participating in the investment activity for at least 12 months. So there is a very detailed definition. And if someone still has questions on that, we're happy to connect you with the right staff to kind of help work through nuanced questions. Because yes, we can define something, but we realize in applying that definition, it can still be hard. Excellent. Well, thank you all for joining us. I mean, we're happy to answer other questions if anything has any further. I'll go ahead and walk through kind of the what's next. So one thing that we are super excited about, and I will show my little prop here, is so last year our annual report, we are really proud of it, and it walks through. It's not your typical government annual report. There are beautiful like charts and graphics, and we spend the time to try to walk through and talk about what is the state of capital and what is happening. And right now, in 2020, one of the big things is the impact of COVID. And we know that it has decimated far too many businesses. And we want to walk through and convey information to the market and across not only different life cycles of companies, but talking about different demographic impacts that we all know far too well. But we walk through those, we look through third-party reports, we pull data from our economists here at the SEC, and we are pulling that together. We are spending some late nights and trying to get as much data and beautiful graphics so that you don't need to be an economist or a lawyer or even an investor to read this. Anyone that I try and draft it, and I hope my dad's not watching, but I try and draft it so that my parents who don't work in this space can understand what is going on in the market and be able to really walk away with an impactful view of what is happening. And so this comes out at the end of the year. So next month, we are looking forward to releasing it. If you want to get a copy, sign up, send us an email at smallbusiness@sec.gov, and we can tell us you want to be on our mailing list. We will add you, and we will keep a conversation going. You can also give us a call. That's our telephone number. One of our team members will actually answer the call most of the time. It is COVID, so there are sometimes missed calls, but we are here and we're happy to help. And then stay tuned. We will be hosting another session with Oregon Rain, which we are so grateful that they were able to set up this conversation in February to talk about entrepreneurs. And I kind of alluded to some of the amendments, but there were a ton of different amendments in the exempt offering framework that we're happy to go into and happy to give additional color on. If there are takeaways or thoughts or things that you want us to consider, reach out. We hope this is just the start of this conversation.
Great. Thank you, Jenny and Sebastian, so much for the wealth of information. I know that the devil's in the details, as they say, right? So please feel free to reach out to them. We will also be following up with an email with some of the links that has been posted in and some of the resources. And then again, when we do this in February with Sebastian and Jenny for entrepreneurs, we'll ask you to please share it with the entrepreneurs in your networks as well. So thank you, everybody. I hope you all have a great holiday next week. Really appreciate you taking the time to join. And thank you again to Sebastian and Jenny and your team for being a part of this important conversation.
Thanks for
Bye,
having us.
everybody.
Bye.
Thank you.